I'll just welcome up the next panel, wherever you're hiding at the moment. I think it's Scott Farrell is going to make his way up. Kate Pounder should be here, and Amit Singh. Where is Kate and where is Amit? Otherwise, there'll just be a one-on-one interview with me and Scott. It's not just you, no. So we'll find the rest of them. So before we start here on this panel, just to follow on from that conversation with with Caitlin, I should say, that's the conversation. I mean, this is the thing that's extraordinary for me when we talk about the sophistication of the conversation that we're having, that we see. That is the conversation. This is bank speak. This is financial services understood at the macro and micro level. They're the conversations we are having, and it's not often communicated that way. And Caitlin made the point that education is lacking. People have formed a view and they won't resolve from the view. That's the biggest issue that we find. I'm going to introduce the panel now. Simon, unfortunately, it was a late withdrawal. Lots of late withdrawals because of what's happening across Sydney, I think, on the COVID side at the moment. So he sends his apologies. This is a really important panel with respect to the conversation within Australia now. What you've heard a little bit of this morning is this is international jurisdictions lending themselves into Australia. This is deliberately crafted in this week. We are relevant as long as we are relevant. That's the key message here. Nothing is owed to Australia. Unless we are outward looking in relation to these conversations, we won't encourage people to look inwardly. But as I've been communicating to people about what Blockchain Week was, the thing that resonated was I said, here's what we're looking at doing. And they said, Australia is strategically important. But we need to get our own house in order to maintain that strategic importance. Hence, the importance of this particular panel. These views are reflective of what's happening in the Australian ecosystem and where the levers are in place. So it was the only one that I said I was actually going to stand and talk in front of this week, unless someone else falls over, because I think it's that important in relation to the conversation we're having. So very quickly, I'll just get you each to introduce yourselves and just the roles you play. I'll start with you, Kate.
Kate Pounder, I'm the CEO of the Tech Council of Australia.
Amit Singh, I'm a Managing Director at Accenture.
Scott Farrell, I'm a partner at King & Wood Mallesons, and also I've led a number of inquiries for the Australian Government, including in relation to our payments framework.
And Simon, I had Simon on this panel because Simon doesn't mind saying things that might ruffle some feathers, fair to say. We had a quick conversation the other day that lasted about 45 minutes, and we talked about where we might be sort of going. So without Simon here to play that role, the devil's advocate, I guess, from my perspective, I'll sort of frame it from what Scott's done and sort of the review that was the payments review, a critical bit of information, critical review for Australia in the financial services sort of sector and the payments infrastructure sector. And it reflected, when I looked at it, two ends of that conversation. One was what is happening today, what the system looks like, how fit for purpose it is today, and what are some of the risks and some of the opportunities that are presenting in the way that we're moving forward. So, Scott, I'll start with you in that context. Just a high-level sort of overview of what the infrastructure looks like today, and sort of the review that you did, and sort of the high-level findings that you had there, and then probably speak to that last chapter, which I found the most interesting, which said, for all the things that we could fix and we need to fix, by the way, here is what I continue to describe as the elephant in the coal mine. These things will change everything anyway. So whatever you decide in part one, part two is going to change those decisions anyway.
Thank you very much, Steve. I'm actually incredibly gratified you found any of it interesting, so I'll focus on that last chapter. The whole report could be summarised in its subtitle, which was From System to Ecosystem, because everything previously was a banking payment system, but we have so much more now. And indeed, the report itself is really looking at value in transit, but we also need to consider value at rest. And there is so much in that is relevant to this audience wherever you are, because a large driver of the move from system to ecosystem is the fact that information is valuable. And cryptographically protected information is just one example of something which is truly innovative. In whichever way you choose to work with it, you have the fact that you are transforming our traditional view that information is not really that valuable because it's so easily shared, to genuinely being rivalrous and excludable information, where we would normally say it's non-rivalrous and non-excludable. Now that produces a need to consider how this affects both the system, you as a participants, but also real people as they make their transition, and they make it very fast, to understand this is valuable and how will I get to use this valuable information, which could be crypto assets in particular form. The important thing about getting ready for that, and I don't mean you guys, because you're already ready for that, but getting the rest of the world ready for that is that industry has customers. If you want to really be relevant to the world, you'll have people in the world who are your customers. And so being able to have a framework so you know what those customers expect at different levels. Sometimes those customers don't expect much protection at all because they know everything you know. But other times they have just seen it on the side of a bus and they may be making assumptions about the way it works because of their other part of their life. So the back chapter of the review, which are all the things which are changing, they're not just, oh, we need to apply the current system to these new changes. There are fundamental changes. And underneath a number of those, and there is more than just crypto assets mentioned in the last chapter, there is this need to say the actual framework has changed, because you guys are working with valuable information in a way that information was never valuable before. Previously, we needed the law to make information valuable. Now we have technology that does it for us.
And Kate, when you look at it from the Tech Council's perspective, lots of narratives, we like to tell the stories. Australia we're ready, we can be a leader, we can be a fast follower otherwise. Are we ready? Are we even close, when it comes to this sort of technology and the sort of macro, micro sort of impacts here? Is Australia ready to say we will actually lead rather than just jawbone the fact that leadership is something we can do?
Great question. Nice to see you starting with the easy ones. Look, I think that Australia's tech sector has come an incredible way, particularly in the last decade. So we've produced something like 100 companies in the last few decades, which are now valued at over $100 million. There's 21 which have been valued at $1 billion. And fintech has been a big part of that story. So I think that in theory, digital assets and the broader innovations around DeFi and Web 3.0, they should be an area that Australia is good at. But I don't think we're fully seizing that opportunity, to be honest, and I don't think we've kept pace with other markets who've started to think in more expansive terms about how they enable those technologies to prosper. And we're seeing that because our rates of investment, for example, in digital assets are still lagging some of those leading markets. And I think we have an opportunity, though. I think we have with Senator Bragg, with Minister Hume, some leaders in the Parliament who do understand the financial sector, and I think are genuinely committed to trying to champion some reform. And I think that's what it will take to see some reforms get up. So there's an opportunity there, but the proof will be in the pudding about whether we actually start to see some comprehensive forward-leaning reforms and whether they get delivered.
And Amit, I think in recent years I've met lots of people in consulting firms I like a lot. Not necessarily has been sort of the first place that people go to, and a lot of the times people will they'll malign the consulting firms and say it shouldn't be a consulting firm view, but you do have a lens into what businesses are doing. What are they seeing? What capabilities do they have? Are they anywhere near ready to be able to embrace the kind of technology we're looking at here?
So I think the really interesting piece about this is that, to sort of build off Kate's point and, in response to kind of Steve's question, is that I think the race, or at least, the race that we talk about between different countries, the good news is that the race really has only just started. I think if we think about this particular technology, we think about the kind of cycle, there's different frameworks you can use, but the way I kind of think about it is that you have a sort of emergence phase, and we've kind of already had that phase. You have this sort of engagement phase where people are talking about it. This conference is a great example of that, and the size and the growth of this conference is a great example of that. You have this kind of phase where then the kind of response is an enforcement response. And in fact, actually what we've seen all around the world is that the types of government agencies that are playing a role in this are all enforcement agencies. I mean, they're not policy agencies, right? Then the next phase is the kind of embedding phase, which is the policy phase. And why I say that that phase has just started is because I think Biden's executive order is particularly interesting because it actually says, okay, so we're kind of in this kind of enforcement phase, but that is still very narrow in terms of its application to the rest of the economy. Let's get into the embedding phase. Let's actually think about what are the policy structures that we need. I mean, Scott talked about, what's the new sort of framework in a sense. Like, what do we think about in terms of developing this market and where do we want to sort of take it? And what's really interesting about that is that we can see that there's a whole range of different applications that have emerged in recent years, but it hasn't expanded to the whole of the economy, right? And this is the opportunity we've got. So the risk is, yeah, we've probably been a little slow to get to the starting line, but that race has just started. And if we actually get onto it, we could get there much sooner. At the moment, it's estimated that basically digital assets are about $2 billion worth about $2 billion in the economy. If we sort of track that through at the same rate of growth, it probably gets to about $8 billion by the end of the decade, right? But it could be as big as, and there's other modeling done by other consultancies, but it could be as big as $68 billion, right? And so there is actually a genuine chance to think of ourselves as kind of leaders in this. This isn't also like, just to sort of, I want to make the point about, while the race has started and we should be optimistic about it, we should also think about the fact that there are important design choices that we have to make in that kind of embedding phase. It is not an automatic process. And one of the things I think about in that is where good intent doesn't necessarily translate into great benefit. If we take an analogous reform process, there's a lot of focus around data protection over the last 10 years. And there's a lot of sort of reform in that space. And while undoubtedly the intent of that, was good, and while undoubtedly it was designed to give people more control and build more trust in technology, the truth is the current research basically shows that the costs were unduly felt by small and medium enterprises. That there was actually some kind of cost to innovation. So I think one of the things that's really interesting is we're at the start of that phase. We probably missed the start, but we can catch up, and and there's genuinely opportunity, and we're seeing that through businesses. Businesses are ready, but I think it needs a broader framework and a structure to think about how we develop this particular market.
Scott, you said the word cryptography. I imagine that most people you say that to, their eyes glaze over and they don't really have a great understanding of what this is. The implications of the technology as you see them then, the way you see these ecosystems at the moment, do people understand the implications? I've said for a number of years, the use of blunter and blunter tools is more likely as people fail to keep up with that technology. What do you see when you go into rooms and have a nuanced conversation about what this technology actually entails?
Yeah, this is super important, right? Because there's a number of people in this room that I know very little about cryptography. In fact, I probably had to practice it a couple of times to make sure I didn't mispronounce it before I came in. But to work in policy, you don't need to know the what. You need to know the why and the how. And the why and the how is usually from the perspective of, I'll come back to it, customers, the people who are going to be using this, the people you are going to benefit. And so the conversation, and this is really, really important for any new market, and this is not a new market, but it wants to be a big market, is that you need to be relevant to the people you want to be relevant to. You need to engage with the people you want to engage with, which means you need to use their language. So, basic rule of thumb is it's a great idea to not use so much about the technology and just actually use words which talk about the outcomes, the benefits. You can, of course, use words about the risks, but what I think is really relevant in policy discussions is that an ability to describe what is genuinely new about the technology. Is it because we can have a shared machine? Is it because we've got programmable money? Is it because we can actually have a robust protection of the value in information which is stronger than the law which actually supports it, for example? Are these the messages you want to get across? And of course, you link it with the other things that are happening in this world, which already have been discussed earlier today. That is a really great conversation. And I have to say, my experience, I've been in financial markets and services and systems for a quarter of a century. this market is moving much faster than the other markets I've worked with, and we've created new markets in the past. I think that ability for all the super clever people, and you are super clever, to be able to translate what is unique about what you do for people like me so that I can understand it quickly, that is fantastic. And I would just say, in a couple of my earlier reviews, I had 4 words on the front cover because they were difficult things to do. They were about data, and I didn't understand everything before then. Customers, choice, convenience, confidence. They are really powerful things to deliver in any policy conversation about why what you have got is new, better, and we should be accepting it into our society.
One of the things, just to build on that, if that's okay, Steve, one of the things that kind of is a useful sort of construct to think about is that we're very familiar in the industry around writing sort of product requirements documents, right? And all of those, or some version of basically a product kind of proposition document. And all of those things basically start with the problem, right? And you know, I mean, and in many of the cases we're able to describe that. But if we can become better at being able to articulate the problems that we can solve in the general economy, I think that then we give ourselves a better chance of doing that. Like 26% of not-for-profits that reported some sort of fraud in the last time that was reported, which is in 2019, showed that it was done by somebody close to that not-for-profit, usually the treasurer. Right? You know, I mean, that's an actual problem this industry can solve. You know, 200 million hours are spent each year doing GST compliance. You know, I mean, automatic payments. You know, something that this forum and the technology that we use can actually solve. You know, why do we still have settlements that take, multiple days when they can actually be done much sooner, and let, small businesses that collapse through cash flow problems? That's an actual problem we can solve. So defining the problem, in a sense, makes it more real for the customers. And thinking about that is part of that process, I think.
Kate, the question then of, people not seeing the wood for the trees here, I think we touched on the other day that there are lots of problems we could fix, but everyone wants to fix all the things all at once, and there are some other things that sort of are punctuated. Is that your view of these conversations as well?
And I think that this is normal, right? Like when you have new technologies being invented and being popularised, but they will typically start at the frontier, right? And you have a smaller group of people using them and understanding them. It's very typical that the broader community isn't going to understand the potential of those technologies. And frankly, even people working in the community don't yet understand the trajectory of those technologies, right? I think that what happens is you get to a point where there'll be a debate about, is this a fad, is this not a fad, right? Which I think has sort of beleaguered digital assets for some time. And you get to a certain point where it becomes clear it's not a fad, right? And I think we are 100% there. This is a fundamental change going on through our financial ecosystems and also governance systems, right? And I think at that point, you have to start saying, okay, how do we allow this transition to occur, right? And that's the point, I think, where Amit's point that we're moving from an enforcement to an embedding phase, that's the point right now. So there's these key overarching questions about what will that framework look like in Australia that will allow the introduction of digital assets in a way that gives people more confidence about investing or about, custody of assets or taxation treatment, all of those things that can hinder the industry's sort of investment and growth. But at the same time, because it's now becoming a more mainstream phenomenon, there's a lot of questions about, well, how do you ensure you do that in a way that minimises risk and sees the industry in some ways stepping up to take more responsibility for some of those consequences? And that's the sort of inflection point I think we're at now. And my view is you need to have that overarching framework in place, because it's really hard as investors and companies when you don't have some level of certainty about what that's going to look like. And I think that's letting us fall a bit behind in Australia, the fact we don't have that in place as some other markets are moving to put them there. But I also think sometimes the best way to get community support and broader support for a movement is to pick off the pain points, the kind of, examples that Amit was given, and just do them well, and pick the things that hurt people's lives, like whether that's a slow payment, whether that's the difficulty of governing a small organisation, like Amit was saying. And if you can change those things and people see the tangible benefits, then it gives you much more imprimatur to go ahead with those broader reforms. So that's the balance I think we have to strike, not almost trying to pick off too much reform and cruelling any chance of change.
I mean, I'll come to you before I close out with Scott. I used to put a slide up in a room and it said change managers. Mm-hmm. And then I used to say quite in faint font deliberately, don't change managers, who outnumbered the change managers 10 to 1. I found the change managers always sort of pushed out of the way because the people who were in the organisations with legacy sort of systems, they worked very hard 30 days of the month. So when the change manager came in and tried to do it, you just couldn't win that fight. Are we kidding ourselves? I mean, as a country, as an industry, the things that you see, other than platitudes, do you think we're anywhere near the ability to sort of actually move through and make material change?
I think we definitely are. I'll make sort of two points that might seem unrelated, but they'll come together. Steve Jobs used to talk a lot about this idea of skeuomorphism, the idea where it's like a design thinking kind of concept about how you use a container or a tool that people are familiar with to help them understand a shift or a change of, that's coming. I mean, and essentially it's really just a framework. So iPhones, even to this day, but the first iOS was built on basically what would look like a bookshelf. And the idea was so that people, if you remember the old iPods, the iPods were built on bookshelves because people are used to going to a bookshelf, taking out books and dealing with it, right? And the idea was it was a container for a larger concept about how you might think about content and how content evolves. And so one of the things I think a lot about is like, how do you think about skeuomorphism in policy? How do you think about skeuomorphism in that change? And this is this conversation we've been having about problems and identifying it with customers and how you sort of build towards customers, right? How do you think about the way in which we can expand it to the broader economy, but use these particular tools? Now, the good news in a sense is that in Australia, we have had a history of innovating for changes in the financial system. This is, there's a long-standing concept around how we thought about principle-based regulation and corporate regulation. Scott's the expert here, but we've basically had like inquiries going back 50 years. You had Eggleston, Campbell, Wallas. There's a whole bunch of old white guys. But still, it still had the the idea. So we have been able to do it in the past, and that's the thing that we should have confidence for into the future. And the unrelated second point that I wanted to make was that it's really interesting because in these types of discussions around adoption and around all these other things, inevitably somebody talks about the Uber story. And one of the things, I worked at Uber, and one of the things about the Uber story that I think is always often missed in the nuance is that there wasn't mass adoption of Uber straight away. Actually, the first 3 years of Uber it was still like a kind of cliched product that lots of people that could afford to pay a lot for a black car could use. Then it had a massive shift up basically when it expanded to the public. But in order, and UberX is the actual story of Uber, right? And it's the actual story of the valuation of Uber. And that happened years after Uber started. But what is interesting about it was built around a framework of acceptance for customers. It built trust around what it meant for customers. It shifted the conversation or the dialogue around what it meant to think about consumer protection, what it meant to think about the opportunity of going into parts of cities that people hadn't been to because they weren't accessed from different forms of accessibility. So thinking about that story and that shift is where we're up to in this stage. That's the shift from enforcement to embedding is what I'm talking about. That's the kind of hockey stick effect that we're up to at this point.
Scott, I'm going to close out with you and characterise you as the face of digital assets in this country. I'll tell you why. I tell you why. My view is the people that you're in rooms with all day, every day, if you can convince them it's a thing, right? And I don't want to sugarcoat where we're at in respect to that. Do you think it's a thing? You've written this report, you've sort of given the consideration, the unfiltered view that says, how are you viewing it? Just to sort of close out, it's a big question with not necessarily a short answer, but is it a thing? Have we arrived at that point where it can't be ignored, good, bad and different? How would you characterise it to those that still say, I've looked at it and I don't think it's anything we should be paying attention to?
I think it performs a function that we don't have. It performs a function that people want to use. It performs a function that if people understood it, more people would want to use. It's being held back in a way by a very traditional path, which is you can't really have trust before you've proved trustworthiness. And this is the part where, and I would charge the industry in Australia with doing this, what you do now will, I know you can all be trusted and you're probably people that trust each other, show everyone this industry has trustworthiness based on your past performance and the way you engage with the opportunity now to build into the frameworks you operate in the recognition of that trust. Then the function that you perform will be used by so many more people. So yeah, it is a thing, provided you continue to grow as well as expecting others to grow. You've got to meet in the middle, and then those functions you perform will hopefully surprise and delight thousands and thousands of us.
Thanks, Scott. I was going to finish, but Kate said one more. Hit me, Kate.
I just wanted to end on one reflection, which is that, sometimes when you get into this debate as an industry with governments or regulators about whether a new technology needs new regulation, it's kind of typically gets characterised as a risk. But actually, if you reflect on why did DeFi emerge and what was the problem it was solving, in many cases it was actually about improving trust, improving transparency, creating the right economic incentives for participation and rewarding those. It was about creating better, more transparent governance models, like actually outcomes that I think both regulators and the community and the industry could agree are in many ways positive. And I think there's also an onus on regulators to be open to thinking about new ways of achieving their historical regulatory objectives and thinking about how the industry is actually going to enable that, not simply provide a risk to those traditional goals. But I think as an industry, we also have a job to try and explain how we will help achieve them. And if we can get that right, I actually think there's some incredibly exciting reforms and innovations that are going to come out of the digital asset space in Australia over the next decade.
I'll get everyone to give a round of applause to our panellists. We're just going to head to a quick break now. Given that our lanyards didn't make it from Singapore in time, let's pretend we all have lanyards on our chest now, and Digital X were the proud sponsor of that. So I just want you to visualise Digital X's brand as you look down and imagine people's names. So we'll see you back here again shortly.